gain can occur because of two reasons. Primarily, one is your actual production process. The actual output is more than the expected output. Second one is it can be where the actual loss is less than the normal expected loss. These are the two conditions in which we will say that we have abnormal gain. Now, the second one is how do we go for treating this abnormal gain? So the answer to that would be the gain is debited to the process account, respective process account, to whichever process it is associated. Say, for example, if it is associated with the first process, it will be debited to process 1 account and credited to abnormal gain account. Okay, so that's the kind of accounting treatment we will have when we are treating abnormal gain. The third factor is how do we go with computation of abnormal gain value or the actual value of abnormal gain. Okay, in that case, the formula is almost same as we have learned for computation of normal gain value, where we consider the normal cost of normal output. Normal cost of normal output is nothing but the actual cost incurred, and if we had some scrap value, we will deduct that from the cost in order to arrive at the normal cost, which is divided by normal output, and the whole is multiplied by the units of abnormal gain. Say if I had 10 units of abnormal gain, I will multiply that with 10. Okay, so that is the formula. So there are three things which we have to remember when we are in a position of abnormal gain. When we are, in the question that when there is a condition of abnormal gain. The first one is how does this gain happen? Okay, the second one is how do we account for this abnormal gain, right? Third one is how do we go with computation of value for this abnormal gain. Now I'll just show you an example. So in this question, it is very clear that 900 units were introduced to the production process, okay, and it carries a cost of 60 per unit. And while reading through the question, we can say that they have given the expenses connected with that, which includes labor, material, overhead. The normal expected loss is quoted at 10%. Okay, so out of this 900 units, 90 units are expected to be lost in the normal process. Okay, so what should be in the general case? What should be the expected output? It should be if 20 units being lost. No, if 90 units being lost, it should be 810. Because we introduce 900 units and they say that there can be a loss of 10%, which is 90 units. So when we reduce 90 from 900, what we get is 810. That's our expected output, normal expected output. Okay. Now look into the question. The actual output of process Y was 820 units to be transferred to process Z. I underline 820 units to be transferred to processes. What has happened? What they were expecting is only 810, but what they really received after that particular process was 820. This is a case of abnormal gain. So reading through the question itself, we should understand whether it is a case of abnormal loss or abnormal gain or normal gain. Okay, so in this case, it is actually a case of, there is a case of abnormal gain. Here, expected output was only 810. Actual output was 820 units. So 10 units, it's a case of abnormal gain. I hope you're able to follow me. It's simple. By reading through the question itself, we will understand whether it is a condition of normal loss, or abnormal gain. In this case, it is very clear that it is a case of abnormal gain. Okay, now we are looking into how are we going for adjusting this in our entries. As we said, it will be in our previous discussion, we said that this will be debited to the respective process account and credited to the abnormal gain account since it is a gain. Okay, so let's see how it is being done. Now, the first one in front of us is process Y account. And we can see that abnormal gain as such is debited to process Y account, right? 10 units, we said 10. How did we get 10? We expected 900 units. We expected a loss of 10%, which is 90 units. So when I'm reducing 90 from 900, I should get 810. But what I got was 820. So it is a case of abnormal gain. So what did I do? Abnormal, it is otherwise called as abnormal effectiveness. So what I've done, I have debited that 10 here. Okay, I have debited that 10 here. Now you might ask me, how did I get this value? It is something which I have done by using the formula which I had shown you previously. This is it. Normal cost of normal output divided by normal output into units of abnormal gain, which you will know when you are doing it. Okay, that's how I got this 920 as my value. Now, we will just look into this process account once more just to make sure that we understood this. See, as it is said in the question, there were 900 units which were transferred from process X, which will find the opening balance in our process Y account. The opening balance here. So the opening balance which we got from process X, it's already given in the question. See, it's given in the question. 900 units were introduced from process X to process Y at a cost of 60 per unit. It's the same thing. We are putting it here, process X. It is from process X. So we put it as to process X, 900 units, 900 into 60, we will get this. Now we know that the material cost is already given in the question. The labor cost is given and overhead is given as 50% of labor cost, which is 6,000. That part is clear for us. Now, we know that how do we account for normal loss, which we have already learned in our previous classes, right? So we are going to account for normal loss by normal loss. Now, how many units? It's said in the question that the normal loss is 10% of total units. So 900 into 10, which will give us 90. Right, 90, and they said there is a scrap value for that in the question. How much is that scrap value? 8 per unit. Normal wastage expected in the process was 10% of the units introduced to the process with a scrap value of 8 per unit. So naturally, the value which we are going to get from the scrap value would be 90 into 8, which gives us 720. So that's what we have written. Now, the next question is, how do we arrive at the amount, the unit to be transferred to process Z? One thing is very clear for us. Number of units to be transferred to process Z is 820. Now, how do we do that? It's already given in the question. The actual output of process Y was 820 units to be transferred to process Z. That's it, what we have done here. The actual unit which needs to be transferred to Z is 820. This value, how do we arrive at? You know it. It's a balancing figure. We know this value, it's a balancing figure. And how do I get it? Is 20 per unit. It's just by dividing total cost divided by number of units, I get 20. So this is process Y account. The new thing, the additional thing which we have learned in today's class is how do we account for abnormal gain? And one more thing which I will know, I'll just tell you, how do I know whether I have an abnormal? I'll just repeat once more so that you will know that. See, in this case, it's very easy to find out whether we had an abnormal gain or not. Because they said 900 units were introduced into this process and there is a normal loss of 90 units. Naturally, what should be transferred to process Z is 810. But they said they have transferred or they have 820 units to be transferred to process Z. If that is the case, it is well understood that there is a situation of abnormal gain. Just by balancing itself, we will understand that. So that's what we have accounted here. Then we calculated the value for this using the formula we have learned and we finalized this. Okay, that is how do we account in process account. Now let's see how do we account that in the abnormal gain account. This part we have already learned. This part we have learned, but I will explain once more. But first, let's go into abnormal gain account. In case of abnormal gain account, now what we have to understand here is, we know that it is a case of gain. So definitely the first thing what we will do here is, by process Y, 10 units 920, because this is actually a complementary transaction. So abnormal gain, it is being debited in the process account, credited in the abnormal gain account. So I have credited it. Okay, I have credited here. Now what I have to understand here is, I have got a value which is, no, here it is said that there is a scrap value for the loss amount. So there is actually a loss which can be accounted for when I'm talking about normal loss. So what I do, I will actually go with normal loss which carries, so it's actually 80 units. It's not 90 units in this case. It is 80 units because they said they have 820 units to be transferred, which means 90 units are not lost in the process, only 80 units being lost in the process. That's why we went with computation of the cost for it, which is 10 unit. There is a difference. Less value, cash value is less. Why? Because we were expecting 90 units, but here there is a shortage of 10 units. So there is a decrease in the cash flow for the 10 units, which is accounted here. Normal loss or shortage of normal loss, which is 80 rupees. I repeat that, you might be having confusion with that. See, it's just an accounting purpose where we are just accounting for the difference which we found. It's like this. Here, there is a shortage in this account when we look into the normal loss account. From process Y, we expected 90 units, right? Here, normal loss being 90 units, but that did not happen in that way. Why? Because we got only 80 units as our loss, and we got money for that much. So naturally, by cash, the amount recouped from the scrap would be only 8 per unit for 80 units, that is 640. So there is a difference in that case, which has happened because of abnormal gain. So what I do, I will create by abnormal gain. It is 10, which comes as 80. 10 into 8, which is 80. So I have balanced my account. The same thing when I'm talking about the abnormal gain, the shortage in the scrap value because of abnormal gain, here I have debited it to bring that into accounts. The same, this one. So what I have done, I have said to normal loss, the shortage in my scrap value, that is 10 into 8, which gives me a value of 80. So this is just a balancing figure which is transferred to costing profit and loss account. This is transferred. Anyway, it is some benefit which we have received, but when I'm considering this amount, this is actually part of our loss which is transferred to costing profit and loss account. Okay, I was expecting a loss of 90 units. I lost only 80 units. So there is a gain. Definitely there is a gain which I'm bringing into account for my better control. But actually that is a loss. It's a loss. 80 units I've already lost, which I really have to bring that into my accounts. So I'm transferring that into costing profit and loss account in my abnormal gain account. Okay, so this is actually normal loss account and abnormal gain account. In case of normal loss account, the only thing which we have learned in today's class, the additional thing which we have learned in today's class is shortage in sale of normal wastage. We expected the scrap value to be 90 into 8, but that is 720 rupees. But actually what we got is only 80 into 8, that is 640. So how do I account for the remaining thing? I can account for only by quoting that as shortage of scrap due to abnormal gain, which carries a value of 10 into 8, that is 80. So the account got balanced. Now the same thing, the same entry where I will make it in my abnormal gain account also, which is debited with the amount which I know where there was a shortage of the scrap value, and the balancing figure is taken to the costing profit and loss account. So this is my abnormal gain account and normal loss account. Now I'll just repeat once more. Abnormal gain is a condition where your actual output may be higher than the expected output, or your actual loss may be lower than the expected loss. Expected normal loss. Actual loss is lower than the expected normal loss. So in that case, that will be quoted as abnormal gain. Now the accounting treatment for that will be the process account will be debited, and the gain achieved, the gain received will be credited in the abnormal gain account. Right? This is what we had been discussing. So in our previous classes and in today's classes, we have covered three things. That is, how do we account for if we had a condition of normal loss? How do we account for if we have a condition of abnormal loss? And in today's class, we discuss how do we account for if a condition of abnormal gain. Now, the condition of normal loss is something that is expected by the business organization. In this case, we have such condition. That is, they expect a particular percentage of loss of material in the production process, maybe because of the particular nature of that raw material, or maybe because of the nature of the production process. They expect that. That expected amount is what we call as normal loss. Now, there can be many cases where our loss is more than what we expected. The reason could be misappropriation, mishandling, or loss due to theft, or maybe due to unforeseen conditions like natural calamity. The reason can be different. But actually what has happened here is our loss, the actual loss, is higher than the expected loss. That is the condition of abnormal loss. Now, the condition of abnormal gain is our actual output is more than what is expected, normally expected, or our actual loss is less than what is being expected.